We have a wonderful guest who we had on last year. Thanks so much for coming back. We have Sandy Burns, who is the Chief Credit Officer for Manulife Bank.
Thank you so much. Happy to be here again.
Yeah, all right. So it might be self-explanatory to some people out there, but for those who don't know exactly what your role would be, let everybody know kind of an overview of what you do at Manulife.
Yeah, I like to explain my role by, I think most folks out there, especially because this is a mortgage podcast, have applied for a mortgage.
Yep,
so
that's right.
I'm the person who basically decides a lot of the guidelines that you have to follow so that you qualify for a mortgage with Manulife Bank.
Wow.
And then I manage our lending portfolio as well. So I kind of see both sides of the coin, both the qualification and then once you're a customer of ours.
Yeah, and do the rules change, or are they pretty stagnant, or what do you have to, and do the rules come from the federal government? I'm sure they do, eh?
Right. So
Yeah.
with Manulife
From
Bank,
all angles, I'm
From
sure.
all
Yeah.
angles,
Yeah.
yeah. It's funny. If you look at a timeline of mortgages, so in the 1950s is when mortgages first started to be a thing. And basically, if you look at the timeline, changes, nothing, there would be a blip here and there. And then when you hit 2012-ish is when things really started to go wild. So in response to the global financial crisis, the federal government kind of got involved. And even though Canada wasn't nearly as impacted as the U.S. and globally some other countries, there was still a big reaction to how are we going to federally regulate mortgages in particular. So residential lending is heavily regulated. And so we see changes quite frequently, depending on what you're seeing in the economy, in trends with consumer debt, and in housing markets as well. And so we have to listen to our regulators, implement any changes that they require. And then on top of that, all financial institutions have their own risk appetite. So what are the things that they're willing to, where are they willing to take risks and not take risks? And so that's part of my role as well.
Within, of course, the confines of the rules.
Indeed.
Yeah.
Always within the confines of the rules, yeah.
Yeah, that's right. All right, so how does Manulife differ in some ways or not from other institutions when it comes to that risk tolerance?
Yeah, so we have a really revolutionary, I shouldn't say revolutionary anymore because it has been around for some time, but it's a mortgage that first came from Australia. It's called the Australian mortgage. It's quite common in the UK as well, but basically it is your checking account and mortgage kind of all in one product.
The Manulife One.
The Manulife One.
Yeah.
And so
Yeah.
when you have your pay deposited into the account, every penny that sits in there helps you pay down your mortgage quicker, helps you to save on interest and everything else. And so that product allows us to support our customers through uncertain times. And I think over the last 5 years in particular, we've seen some very uncertain times, but the flexibility of the mortgage itself is something that's very helpful for folks.
And I find from the Manulife One, it's very different from some of the other offerings that similar institutions would offer. Like Scotiabank, for example, has a Scotiabank Step. TD has the TD Flex line. Some of the other FIs have very similar type products. But what Manulife really, the big difference is people using this as a bank account. And I think that's the biggest advantage if you're going to have this product. Otherwise, there's lots of FIs that offer a very similar product. But if you're going to deposit your pay in there and leave it in there all month, and use your credit card and only pay off your credit card once a month, there can certainly be some huge advantages.
Absolutely. We get a lot of customer testimonials about being able to pay off their mortgage 10, 15 years quicker than what they anticipated. And then if there's an incident or something happens that's unexpected, there's that ability to access the line of credit part of the Manulife One to help them through those uncertain times.
Okay, so are you seeing, you talked about uncertain times, and we certainly are experiencing uncertain times right now with what's happening in the United States. How's consumer confidence in general right now with tariffs and any impact on consumer confidence?
Yeah, I would say that right now the term we use the most is uncertainty.
Yeah.
And we're really starting to see it with consumer trends where, especially in the residential market, we are seeing, especially like Toronto, Vancouver, Calgary, Montreal, where we expected this spring market to be one of the busiest because we saw interest rates dropping, and a lot of people
Pent-up demand.
Pent-up demand. People have been sitting on the sidelines waiting for those interest rates to drop, and we're not seeing it as much. There's some markets that we are still seeing activity, but for the most part, people are very uncertain. And it is causing stress, and so we see people putting their houses on the market to be sold. However, the buyers are just not there. And I think a part of it is we don't know what's going to happen with interest rates. Another part is probably they had their savings in the stock market, which has been a bit of a roller coaster ride.
Especially as of the last couple of months.
Yeah.
I need to work for at least another year.
Right.
I joke about that, but I'm really kind of not joking.
It's true. It's
Yeah.
very, very true.
Yeah.
And so what we're seeing is a lot of people questioning, what should I do now? And then when you layer on top of that, this is when the great renewal the first wave has just started of the great renewal. So that's folks that locked in, took advantage of those super low interest rates that were happening over the pandemic. Those 5-year rates are now coming up for renewal. And OSFI, our federal regulator in particular, was very concerned what was going to happen when interest rates were so high. People were renewing their mortgages where, 5 years ago they probably were getting in there around 2%, 3%.
Right. A lot of those mortgages, and even some sub 2%.
That's
really.
right, yeah. And so renewals were sitting at 5-6%. Now that the interest rates have dropped, we anticipated a lot of movement in the housing market, and we're just not seeing it. So there's some concern there. And then on the flip side, you are starting to see non-mortgage debt arrears starting to increase.
There was a article that Equifax had put out about credit. What do you think the credit matrix looks like in Canada right now? As you know, Canadians are at an all-time high in unsecured indebtedness. Like, how are they paying?
Exactly right. So when we're seeing things like investments dropping because of the stock market, we are seeing the cost of living higher. Things are costing 2-3 times more at the grocery store. At least we're seeing a bit of relief on gas, which is okay.
It's helpful.
But we are starting to see the cracks happening with that non-mortgage debt. So people are going to let a credit card payment slide, or a car payment slide, or a line of credit payment slide, rather than putting their home in danger. We want to protect where we live.
But then that has the ripple effect of when they want to renew and their credit score and all of that stuff, right?
Exactly.
Yeah. So how much of a challenge is that when on renewal? Are you seeing people with less stellar credit than they had originally?
Yeah, so it's if you stay with your financial institution, you'll typically get a renewal in the mail.
They won't check it.
Right.
Yeah.
Some do, though.
Some
do, and that's how they offer their pricing is based on the credit.
How is it? Is it randomly chosen as to who gets checked and who doesn't? Or?
No,
This is a secret sauce, Todd. You really want to know.
Well, that's what I do. I dig
You asked
in.
a hard question.
That's right.
I mean, but I really do want to know.
Yeah. So how do you determine?
I think for the most part, for our fixed rate, like our amortizing mortgages, then renewals can be sent out. If folks want to refinance, so if they want to access a little bit more of the equity in their home, or they want to look at different structures on their mortgage, or even port their mortgage to a different property, then absolutely they're going to go through a full
application.
qualifying. You got it. Yeah.
Yeah. Well, thank goodness for the stress test, right? Because that really paid off.
Absolutely.
Didn't it?
Absolutely. Yeah.
As much as it probably feels like it's a pain in the butt at the time for the lender. But you and I have talked a lot about this.
That gave us a lot to talk about for years, really. But really, thank goodness, the federal government protected Canadians from themselves.
100%. Yes. Yeah. It was at the time. It was such a challenge to implement.
It was a pain,
and it was so difficult for consumers to understand it. It felt like just another hoop they had to jump through to get into a home.
Yeah.
At the end of the day, what we really saw was that protected thousands of Canadians from being ousted from their home, which, I mean, no one wants that to happen.
Yeah,
so
right.
absolutely, it was a great thing.
And how are Canadians paying their mortgages? You said obviously there were some cracks coming with some non-mortgage debt, but how is the mortgage debt doing?
So we are seeing.
Because I know that was a fear. Like when the Canadians Banker Association, they'd met and they're like, okay, the great, foreclosures are coming,
yes,
especially with this, renewal wave.
Yes.
But are people still paying their mortgages on time?
So far, we are starting to see incremental increases. So the Canadian Bankers Association reports on that, but certainly not what was anticipated, say, a year and a half ago.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.